Okay, boys. Well done to all of you that are engaging and posting your homework up to me. Okay, very impressed. So keep up the good work. Okay, just want to look at a couple of tax terms here, gents. And reason being is because I want to show you how you would calculate, okay, income tax for somebody, and then to be able to calculate then from that their take-home pay. Okay, also known as their net pay. So gross stands for. Okay, I'll do it as I go along here. Don't want to confuse you. Okay. So the tax rate, lads, is the percentage of tax that is levied, so basically charged on a person's income. In Ireland, boys, there are two different rates. Okay, you've got the standard rate, which is currently at 20%, and you've got the higher rate, which is currently at 40%. Now, why is there two rates? Well, okay, PAYE, so PAYE, okay, is your pay as you earn income tax, okay, and that is a progressive income tax. So if you remember from earlier on, okay, if we go back up here, okay, you see here, most direct taxes are progressive, which means that the tax rate increases as income increases, okay, and this results in those on higher incomes having to pay more tax. So the more money you earn, gents, the more income tax that you must pay. So if the tax rates differ depending on how much income you retain, okay, it's known as a progressive tax. A regressive tax then is the opposite. Basically means that no matter how much money you earn or how much income you receive, the tax that you pay would be constant for everyone. So value added tax, so VAT, would be a prime example of that. Okay, it doesn't matter how much money you earn. You go into the shop, you buy a pint of milk, okay, you will pay your VAT upon that. And at the rate, I think at the minute it's about 23%, okay? So if we're looking down here then, a tax rate, you've got two of them. You've got a low tax rate, okay, which is a standard tax rate, okay, so that's currently at 20%, and then any more money that you earn above that, okay, you'll be charged at 40%. So leading on from that, then you have this thing called a standard rate cutoff point, okay? Basically what that means is the amount of money, okay, that you earn that are taxed at the low rate. That is your standard rate cutoff point. For instance, if Michael earns €60,000 a year, okay, and his standard rate cutoff point is €33,000, that means the first €33,000 that he earns, okay, is taxed at 20%. Okay, we take 33,000 away from his total income, which is 60,000, and you're left with 27,000. Okay, and that €27,000 then is charged at 40%, and that's why you have a standard rate cutoff point. Anything below the standard rate cutoff point, you charge at the lower rate, and anything above the standard rate cutoff point, you charge at the higher rate. Okay, a tax credit, lads, basically is discount on tax that is charged to you. Now, your tax credits, gents, okay, as you can see back up here, reflects their personal circumstances and include a PAYE tax credit and a single person's tax credit. This information determines the deductions from their gross pay and therefore what their net pay will be. So basically, due to your own personal circumstances, you may get a deduction, okay, tax credits from the tax that you have to pay. Okay, and obviously you can see here, lads, that this varies from person to person depending on the circumstances. Okay, the term gross pay then is before all deductions. Okay, your deductions both statutory and voluntary. We know the term statutory is by law, okay, governed by the state that you must take it from your gross pay. And then voluntary deductions, okay, would be stuff like a pension or a savings scheme or a trade union membership or something like that, that you are voluntarily deducting from your gross pay. When you take your deductions from your gross pay, if you look down the bottom, lads, you're left with net pay. Okay, and this is also called your take-home pay, so it's after all deductions have been taken into account. Now, don't worry, lads, I will do a example here for you, okay? Now, so Daniel Whelan, okay, has a total annual tax credits of 3,300, and her standard rate cutoff point is 33,800 per year. Okay, if you wanted it for a week, you would just divide by 52. If you wanted it for a month, you divide by 12. Okay, calculate her weekly tax credits. Okay, so if you want to calculate her weekly tax credits, okay, all you got to do is you look at the tax credit, okay, which is 3,300. So if I just go in here for this for you, lads, okay, if you want to calculate her weekly tax credits, Okay, what we'll do is we look here, you see the tax credits, okay, for the year. So annual, the word annual stands for yearly, okay, it's 3,300. So 3,300. Now we want that for weekly, so I'm going to divide that by 52. Okay, now get the calculators. 3,300 divided by 52 will give us €63.46. Okay, so there's your weekly tax credit. That's the first part of the question done. All right. The next one, it says calculate her weekly standard rate cutoff point. Okay, again, no big deal. So her weekly standard rate cutoff point. Okay, so here again, you just take what her standard rate is. You can see there her standard rate is 33,800 per year. So 33,800. Again, you want it per week, so we're just going to divide by 52. So 33,800 divided by 52, it gives us 650 per week. Okay, just to be sure, I put per week down beside each of those so you understand it's per week. All right, go back to the question. Okay, calculate Danielle's take-home pay for a week in which she earns a gross wage of 800. Okay, in addition to her PAYE income tax, assume Danielle pays a €30 USC contribution, okay, and also a 4% PRSI contribution. All right, so the first thing we do here, gents, okay, is we're going to calculate her PAYE using the standard rate cutoff point and the rates of 20% and 40%. So let's go back here, and this will be the C part. Okay, so we're going to do the PAYE calculation first of all. Now, as I said to you lads, look at the standard here. Okay, this is the standard rate cutoff. Okay, so that's your cutoff point. So what you do is you take that 650, okay, and you multiply that by the standard rate, which is 20%. Okay, when you do that, you'll get €130. All right. Now, we know that she earns, as you can see in the question here, she earns €800 a week. We have only taxed her on the first 650. 800 minus 650 will give us €150. And we're going to multiply that by 40%, as that's the higher rate. Multiplying 150 by 40% gives us 60 quid. Okay? So therefore, 130 plus 60 is 190. Okay, so her total tax bill is 190. Now, however, okay, don't forget she has a tax credit. And as I said to you before, this is like a discount on tax. On tax now, on the PAYE. Okay? So what we'll do is we'll minus the tax credits. So you take your tax credits. Okay, brackets for minus in accountancy, and it's €63.46. Okay, so 190 minus 63.46 will leave us with 126.54. Okay, and that there, gents, okay, is your PAYE, your pay as you earn, which is also known as your income tax. Okay, that's your PAYE taken care of. Now, go back to the question. Okay, they want us to calculate the take-home pay, so we have to take into account the PAYE, USC, and then there's 4% on her gross income for PRSI. Okay, so if the PAYE is 126.54, okay, we know the USC, okay, is 30 quid, given to you in the question. The PRSI we've told is 4% of her gross. Her gross wage is her wage before deductions, which is 800. So it's 800 by 4%. Now if we work that out, 800 by 4% gives us €32, lads. Okay. Now I have my total deductions. Okay. I'll get a different color pen here for you. So this 126.54 is your PAYE deduction. This €30 is your USC, which is your universal social charge. And this is €32 is your PRSI, which is your pay-related social insurance. Okay, so now I have my total deductions. So why don't I add up my total deductions? Okay, so my total deductions is my PAYE, which is 12654, my USC, which is €30, and my PRSI, which is €32. Okay, adding those three together, and we will get 170.54. Okay, now to get your take-home pay or your net pay, lads, all right? So your net pay, okay, also known as take-home, what you actually physically will be taking home with you, okay, is your gross wage or your gross pay. So in this question here, your gross pay was €800. Okay, we're going to minus our deductions. Okay, bracket from minus. Okay, the deductions was 170.54, so €80, okay, minus your 170.54 will give you 629.46. So that figure there, lads, okay, is your net pay, or also known as your take home pay. Okay, now just to recap, gents, all right. So, just look at a couple of terms again. So the tax rate, okay, which is your PAYE tax rate, because we're talking about income tax, okay, your tax rate is divided into two different rates. You've got the lower rate or the standard rate, which is 20%, and you've got the higher rate, which is 40%. So therefore we know it's a progressive tax. The more you earn, the more tax you pay. You've got a standard rate cutoff point, which defines to you how much money you will pay at the lower rate, and anything above that standard rate, you must pay at the higher rate. Tax credit is a reduction on the tax that you must pay. Gross pay is how much money you receive from your employer before deductions. And net pay, or otherwise known as your take-home pay, is when you take away your deductions from your gross pay. Okay, we got this question here. We said the tax credit was $3,300 per year. To get it for a week, we divided by 52. Your standard rate cutoff point for the year was $33,800. To get it for a week, we divided by 52. Okay, so that was A and B there. And then the main bulk of the question was, okay, calculate her weekly standard rate cutoff point, which we did, and her weekly tax credits we did. Calculate Danielle's take-home pay for a week. So to get the take-home pay, lads, you must do all your deductions, which is your PAYE, your USC, and your PRSI. Take them, add them all together, take them away then from your gross of 800, and you should get your net pay, which was how we did there, gents. Okay, so I'm going to post this video to you now, and then I'm going to give you a homework question to do.